value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Happy Halloween, Bob.
Coming right up. That's tomorrow, and the weather in Vancouver's good for the kids, so that's great.
And also a full moon on Halloween for the first time since 1944, when the bomber pilots would have appreciated it.
Oh, I remember that one well.
Oh, yeah, of course. Who could forget? The sound of the Lancasters warming up in the backyard.
Yeah.
Bob, we have a show packed full of listener questions, and as you know, we love to answer them. This rather extensive question here is from Willem Grooters in the Netherlands, and we thank Willem for sending this rather extensive question. The first segment of that question: in a past interview, Mr. Hoye has said that between the years, say, 1875 and 1900, the U.S. economy went through deflation because prices were falling. But doesn't Mr. Hoye make here the same mistake as all other nutty followers of the Austrian School of Economics?
Yeah,
here, Mr.
we got to stop there.
Okay.
Yeah, first of all, that long deflation followed the bubble that peaked in 1873. And then, of course, for consistency's sake, I always stay in the senior currency, in the senior economy and the senior currency, which then was England. The U.S. was a much smaller market, and it was on a fabulous expansion within a global depression, and this is where people get confused. So in England, after the bubble, the economy was weak for extended period, such that in 1884, the economists started calling it the Great Depression. And it lasted to 1895. And now, as far as the Austrian School of Economics, those guys are a bit weird. I'm not even going to comment on them. But I'll give you one example of the deflation showed up in generally weak commodity prices. Industrial commodities deflated, and then also for gold deflated. Of course, in the long contraction, the real price of gold went up. So there was a boom in the gold sector, but there was a farmland values in England, and this is off of memory, but the index would be at 58 in 1873 at the top of the boom. By 1895, it was down to something like 38. Now, that was farmland value, so there's deflation. And in the U.S., there's an index of mining and smelting stocks, and they got super deflated. So it depends what you look at. Now, let's look at some other part of the question. Oh, yeah, there's a difference between falling, rising prices and debt, credit, deflation, inflation. Is this? It's just very simple. Each great financial bubble was followed by a post-bubble contraction, weaker economy, and always a continuing contraction of the amount of debt that people were handling because the debt couldn't be serviced. And that's the best way to look at it. Rising prices are required to get debt inflation? No. Well, yeah. The thing about prices, Willem, is that it's best to and credit, it's best to go back to the old classic definition of inflation. And it used to be that inflation is an inordinate expansion of credit. And that inflation, as history demonstrates, can be either against tangible assets such as commodities and wages and stuff like that, and then that's what everybody realized in the 1970s, that was inflation. But even most economic schools don't really understand this, because the other thing that you can get against expanding credit is inflation in financial asset prices like stocks and bonds in a bubble where we are now. And you can point out that that money supply has been expanding in the U.S., but for a large part of the last 20 years, there's only been about one run at price inflation, and it didn't amount to much. But there has been hyperinflation in financial assets. Now let's move along. Real estate bubbles. And also, real estate bubbles. Anyways, that's been also part of the final legs of a great bubble in financial assets, is that people bid up largely residential real estate prices. And then, of course, it all heads south after the bubble's over. So, Willem, thank you very much for your long question, and I think we could get together over a beer and discuss more of these issues.
A question from Kathleen. Bob, as we approach Halloween, I wonder when the stock market will finally give up the ghost. The Fed is like a headless horseman, doing the same thing over and over again as it tries to keep a zombie market alive with more debt. And the public has responded since the March sell-off by betting the family farm with record leverage and call options. Bob, this market doesn't seem to have its head screwed on right. Is the final witching hour ahead? Have we finally seen the top? Ooh, scary stuff, Kathleen.
Kathleen, I think you can write a guest piece for one of our issues. That's really fun. Excesses in the marketplace, stocks going into the peak in September registered all kinds of momentum, and also the bond market has been absolutely insane, particularly if you look at Europe and when you've got nominal yields down to zero. So the inflation in financial assets has been hyperinflation in bonds and pretty wild inflation in stock prices. And we're in the period of time, the time of year, when sudden discoveries of insolvencies and liquidity problems can be discovered. But so far, it's kind of holding things together. You've got Wall Street funding the radical socialist Democrats, and maybe Wall Street's long because they think the Democrats going to win, and then maybe other people are long the stock market because they think Trump's going to win. And you had the huge Trump rally coming out in 2016, which at the time we called that rational exuberance, because the boom in the stock market was discounting a reform of U.S. Taxation and economy and all that sort of stuff, which worked out. So, but it comes back to what's going to happen tomorrow. I don't know, but we are in a period where liquidity problems can be discovered, but also as we go into November, if there were severe liquidity problems in the market, is the time when it would bottom. So the judge is still out on this, but Kathleen, thank you for your very fun question.
Michael from Burbank asks, Bob, given the recent market sell-off, is it time to buy the dip in gold miners and silver, or should we wait for the usual seasonal low in late November or early December? Also, if President Trump wins on Tuesday, then can we expect a relief rally or possible new highs at year-end for the stock market? Alternatively, since bank lending is getting tighter and there really seems to be liquidity issues in the market, I wonder if the market might just sell off hard after Tuesday. Thank you, Michael from Burbank.
Michael from Burbank, yeah. Hey, this is in everybody who's had a bit of experience, in everybody's mind, and it's an extraordinary election. Hitherto, elections were between differences in policy. And both parties in the U.S. would try and get the middle-of-the-road vote. So it wasn't nothing radical. But this now is between the continuation of the U.S. as a constitutional republic or the end of America as a constitutional republic, run by a mob, a Democrat mob, in the same way as it runs Burlington or Seattle or Los Angeles or San Francisco or Portland or downtown New York. There's never been a choice like this before, where you can vote for disaster or vote for improvement. And so until it's over, your guess is as good as anybody else's. But we have our tools, technical, for overboughts and oversold, so that will guide us on trading. And I think we'll work our way through it.
Henry Solomon from El Paso, Texas. Where else would El Paso be anyway?
Right.
And we always think of the Marty Robbins song about El Paso.
Oh, I love that one.
Beautiful song.
Yeah.
Henry asks, are the gold mining stocks like GDX likely to decline further?
Yeah, until the mysteries of this election are cleared, we're just going to, as I said, the last question, when they get oversold, we will advise. And when they get overbought, we'll advise. But to try and determine where the stock market is going to be 3 weeks from now, it's difficult because we're in an extraordinary political climate.
And a question from Richard, who states he's a longtime listener and recent new subscriber to your newsletter. I'm confused about your take on the markets. I've heard you calling for deflation and significant long-term declines in the major indices. However, in your newsletter analysis, I see you predicting a market small decline in the next few weeks, followed by a seasonal rebound from November to April. I'm confused by that. Are these predictions inconsistent, or am I misunderstanding?
Glad you asked the question. Yeah. As I've just mentioned, we're in a period of time where liquidity problems can be discovered, and typically, if you have that, it would maybe clear in November. But in the 1825 bubble, which was a huge one, and using then London as the financial center, they didn't clear their problems on that disaster until January. So what we're pointing out is that if this was an ordinary world, the lows could be set sometime and cleared over the next 4 or 5 weeks. But this is not ordinary times. This is extraordinary stuff. And we just have to take the market one day at a time. My colleague Ross in his technical work is reliable, and we'll just see how this goes.
Richard also asks, are you bearish on the markets right now, and should investors step aside or be invested here, at least for the first half of 2021? Thanks, Richard.
Okay, Richard, yeah. Investors should be, have been building cash. Our advice on the big markets is to raise cash on each of the rallies. And we've got exceptional valuations, very high valuations. You've had momentum, you've had pattern that you usually get with an important top. And it's only very nimble traders that would try and trade within some of these moves in here. So it's best to protect yourself. And as to whether the market may recover in the first half of the year, I'm saying it's the same thing. We have to wait and let the market develop, and for traders, take the opportunities as they come. But for investors, the opportunity is there to be lightening up on the rallies. And then our view also is the opposite way in the gold stocks, is for investors should be accumulating gold stocks on weakness. Because this is where the big bull market will be over the next few years. We're in a multi-year bull market for the gold sector.
And Bob, that should wrap up the questions that we had from our listeners over the past week, and we'll get into some interesting headlines right after this.
Sure thing.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, the struggling rental market could usher in the next American housing crisis?
That was the headline from the Wall Street Journal, yeah. And I saw one the other day on the rental market in San Francisco, for example, is extremely soft. So then what you have, if the owners of these properties can't, the price of the property has to adjust down to where the rents are, and this is it's not a good thing. It's going to be weaker property prices ahead of us.
Now, how does that create a housing crisis if rent is more affordable?
I think they're talking about a crisis in pricing for leveraged owners who are renting out houses. In the mortgage market that's mortgaged against the property values. So, yeah, no, it would be a part of the overall contraction that you can get following a great financial mania.
Another headline: beer can shortage won't save some Molson brands.
Yeah, I hadn't noticed it. Of course, I don't drink beer. But anyways, I like the headline. There has been a shortage of beer cans. Now, whether it was due to tariffs on Canadian aluminum or just the inability with less staff to be able to manufacture so many different labeled beer cans, who knows? But anyways, I thought it was a fun headline.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, another headline that caught your eye: biggest IPO ever is stoking investor frenzy. What's the story there?
In Asia somewhere, China maybe, and for us old-timers, of course, an IPO means initial public offering. And decades ago, they were called new issues. Hey, I like that one better. But a new issue market can be part of a culmination of a great bull market, where even in the South Sea bubble in 1720, London did something like over 400 new issues in that 1 year. It was amazing. But anyways, key on the story, biggest ever, huge demand for it, and then what happens is the people think they're not going to get their full allotment on the new issue, so then they'll go and buy something else or put in an order that is three times bigger than they want. But I remember this in 1968, huge new issue market. I was with a very strong regional broker. We were doing new issues like crazy, and they're coming out and doubling in an instant or tripling, and everybody had to get in on the hot action. And so I was in the on the institutional desk, and so you saw this guy. He would put in an order with the retail salesman at the firm, and then he'd put in orders through the trust companies in town and all over the place, and then maybe he's hoping to buy 1,000 shares, and he only gets a lot at 100. So then came the issue that failed, and he got filled all over town. He might have bought 5 times what he could afford, but that was the way it worked, and he got filled. It was a disaster for him, but I remember it at the time. I think I'll write it up for our letter. It's a fun story.
Bob, thank you so much for chatting with us this week.
Yeah, Jim, we've been all over the map today, and lots of questions, and look forward to getting together next week.
And it doesn't matter where your question is from or if it's a slight bit unusual or different, and Bob doesn't mind delving into the 1800s. I've asked him about Persian and Roman stock markets in ancient history, and Bob always had an answer for it. So please don't think any question is too small or too big. If you have any questions for Bob, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.